So I had a bunch of people asking me about today's trade of 3 a.m. So first thing that I saw was that we had a 15-minute SMT off this high right here. So if I show you on the 15-minute, you can see we failed to sweep this high on ES, but we swept it on NQ. That's a clear sign that there is a potential reversal here. We are also very diverged on a higher time frame, whereby ES has taken all-time highs. So you have to be wary of these SMTs. However, you'll see that when these SMTs start to stack, that's how I build confidence. Also, the fact that we had an hourly unmitigated gap just down here, as soon as 3 a.m. opened, this became a fair value gap and it needed to be rebalanced, considering the fact that using the next day candle prediction is the fact that we've swept the prior hourly high. So it was also going to be an hourly and a 15-minute SMT off this high. And then we're closing as a accumulation / down close candle with a long wick and an inefficiency for us to target, right? So if I zoom down, I'm on the 15-minute. Yes, you can see that on ES we had a 15-minute inversion, right? However, on NQ you can also see that on the opposing side, following this hourly SMT, we had an inversion of this BISI right here. So inversing this with no SIBI right here, so it made sense there's only a inversion, right? But then we also put in an SMT off this low. So that is reason for us to then trade back to rejection blocks. So rejection blocks are likely to be retested, and it's often the offering for the low risk before we go and run out this sell side liquidity. Because you got to think from a market maker's perspective, right? Is they're going to try and run out, however you want to think about it, right? This way, I think about it this way and it helps me, is how are they going to run out as many people that are looking to get in short as possible before making the actual run, right? So they'll go put in an SMT here. It seems like, okay, we've reinversed this fair value gap. We've reinversed this. We're going to look to target towards these highs. No, there's an SMT here, potentially a protected high, right? If I zoom down even further, so I'm in replay here, you can see that we're inside of these 5-minute SIBIs. So firstly, I was looking to see how we react inside these 5-minute SIBIs and potentially see if we were to get an SMT off here and then continue lower. However, it made sense for this 5-minute rejection block, which was our SMT high, to be retested. And I was potentially looking for a sweep of this high to put in another hourly SMT off the high. However, it didn't seem to need it. So as I let this play out, so here we open off 3 a.m. We put in a small low. Do you think this is likely to be low of hour and we're going to have an open low high close? No. The more likely answer is that we open, we manipulate higher to put in SMTs, right? So I'm looking for SMTs inside of this suspension block. So SMTs inside of a prominent PD array and SMTs inside of this 5-minute rejection block. So as I let this play out, you can see that ES now has already put in equal highs with this high just over to the left, right? So we've put in equal highs here whilst maintaining this SMT of this high, right? So long as we don't sweep this high, this SMT over here is still valid. So then you can see we're getting rejection wicks off of this SMT, right? We're also inside of a SIBI just over to the left, and you can see we're reacting very cleanly and we're closing just at the high where the wicks are doing the damage above the FVG, and then the bodies are respecting it, right? You could even continue this all the way up to here, and you can see that we're barely even closing over the midpoint, right? Because with fair value gaps, if there's two inefficiencies together like this, you can just include it as one thing. So, right, what I've seen here is we've traded up, we're getting rejection wicks out of, you can see we clearly respect 0.5, right? We then create a first presented off this next candle, right? So once we have this, we have our first presented. I saw this, mark this out. I'll remove the suspension block so it's cleaner. This right here is our 3 a.m. first presented fair value gap, right? And it is bearish. So what I'd like to see here is I got a fill just in here at the low of the 3 a.m. first presented, and at the opening price of 3 a.m. open, I initially put my stop for this high. However, due to the fact that it was equal highs on ES, I saw the potential for a rerun of this high. However, I knew that we would still respect this 5-minute rejection block and fail to take this high. So I ended up moving it just up above this high, which wasn't a necessary movement in the end, as this ended up holding as a rejection block inside of a rejection block, right? So letting this play out, you can see that we clearly respect 0.75 and the lower octave. And then you can see we get this inversion right here of our 3 a.m. first presented. One thing with this inversion right here, and the fact that we also created this fair value gap right here, shaded in quadrants, right? The fact that we created this fair value gap on this leg as a manipulation fair value gap to trade us back up into this rejection block, you can also see this, it's called a Venom model. So where we have one drive up into a form of liquidity, the other drive trades up into the wick, and then we have immediate displacement away from. So you could even take the inversion right here of our 3 a.m. first presented, and these quadrants is what I would call the 3 a.m. evolving first presented, because you can see how this was the first one presented and it was bearish. I also like to pay mind to the first one presented that is opposing, right? So if the first one was bearish, this one is now bullish. That is prominent to me. So one thing to also note about this sequence right here is that once we closed below this low, being our change in state of delivery, you can also consider this to be our change in state of delivery, as we had this being our swing high, and then that is our last down close before a series of up close. But the fact that we also had body closure above these bodies right here means that you can also consider this. So if this right here, when we close back over here, makes this a bullish order block, when we inverse that, this becomes a breaker block. So breaker block overlapping with our 3 a.m. first presented would make this 3 a.m. first presented what is called a Reaper. So it is a Reaper IFVG, whereby it is an IFVG overlapping with a breaker block. And you could take a retracement play if it had done that and then trade away from, right? So what we see here is almost immediate spooling, as we have this hourly unmitigated gap at our lows with equal lows. We also had lots of low resistance liquidity, and we were in a clear market maker sell model. Where would be our original consolidation? I would consider these relative equal lows, whereby we've had accumulation, we've left the range, low risk, leave the range again. I'd still call that the low risk. First stage accumulation, second stage reaccumulation inside of these bissies right here. And then we see our distribution. We have one high, smart money reversal off the high. This is a very clean sequence off this high too here. However, I wasn't on the charts at the time. And then you can see we get our low risk short offering. And then it is to go run all of this liquidity back to fulfill our market maker sell model, which that would be of lowest hanging fruit would be either this consolidation right here or this consolidation right here. So in identifying market maker models, I'm looking to the left, I'm looking for low resistance liquidity. Okay, now where does either that low resistance liquidity end, like here, whereby we've rated this low, or where is our last form, our closest form of accumulation with relative equal lows or relative equal highs if it were opposing. So to me, this is a very clear sell model right here, and you can see as it plays out, we immediately spool for this hourly unmitigated gap and these relative equal lows. And you can see we begin to continue to fulfill this market maker model, as we have clearly now flipped after sweeping New York PM high and our significant divergence with all-time highs, that we can now run this low resistance liquidity, potentially even back towards this low, as this all seems like higher time frame low resistance liquidity. Speed it up. So you can also see here, extra source is the fact that next hourly opens, right? 4 a.m. opens right here with this open on the hourly open, high, low, close. You can see we open, we manipulate higher. We manipulate higher to do what? Put in SMTs. We manipulate higher to put in SMTs inside of these 5-minute cibbies, or this 5-minute liquidity right here. It's a tiny cibby, and this 5-minute high right here. which was also to trade into this unmitigated 5-minute CB with no top wick on this high. So this needed to be ran on ES. However, there was no real need for us to run any higher than this CB right here, as this would be our premium array for this swing right here. And it is the only 5-minute within this swing. You can also see that it aligns with these lows right here. Very clean respect. I hope this helped you guys. Hit that like button and make sure to subscribe, and let me know in the comments what you would like to see in the future.